right here, there's like 787 contributors that are working on this right now. So the key factors in the Civil War, one of the really interesting things is if you look at the Bitcoin Cash nodes, which is basically all the computers that are on the network post a fork in August 2018, you'll see like the percentages, and you'll see that 64% of the nodes were actually from the Bitcoin ABC, and 33% were attached to Bitcoin Unlimited. So you kind of have to think, are these the guys that are fighting the Civil War so that they can make more money? So were they just trying to play hardball with getting more power? Or trying to say, oh no, we don't want to go off of the original Bitcoin, we need to make these improvements? Or were they looking to make more money and, you know, kind of do like a power and a cash grab by forking? So, you know, that's an interesting question. Basically, from this point on, Bitcoin Cash was a fork in this red section of this chart. So you can see there's all like kind of like little forks in the beginning, but the first major fork was Bitcoin ABC, which also established the new coin Bitcoin Cash. And from there, like you kind of follow the branch, like the brown branch, then it goes to several other forks off of the Bitcoin Cash branch. So it's just kind of interesting, this chart, but really people are still working off of the tried and true Bitcoin, and some of these other developers are, you know, just copying the code and trying to create other forks and, you know, knock yourself out. But what's really important is Bitcoin Core. So the Bitcoin Cash overview is the symbol is BCH. It was an altcoin that came from Bitcoin, like the hard fork. The supply chain is the same at 21 million BCH, and they wanted to increase the block size so that it would support more transactions and allow for the Lightning Network. But the problem is if you have larger blocks and more transactions, there is going to be more security issues. But again, with the bigger blocks, you're able to do faster transactions at a lower cost and a faster speed. And so this is kind of why they saw Bitcoin Cash as like an everyday purchase mechanism, kind of like, you know, a debit card versus just having a savings account. So the key players, I'm going to toss it over to Srinivasa, and he's going to cover these guys.
Yeah, hi. So continuing with the Bitcoin Cash, this slide presents some of the key figures associated with Bitcoin and Bitcoin Cash. For example, Craig Wright, who claims himself as Satoshi, like nobody in reality likes him. Or someone like Roger Ver, who is also seen as a Bitcoin Cash Jesus. So it's like, it's all about the personality.
He was crucified. Somebody crucified Roger, and he actually got resurrected.
I think, Shannon, we can go to the next slide, please. So this is again like about Bitcoin being seen as a savings account, and Bitcoin Cash is seen as a checking account in the layman's terms, because Bitcoin stores the wealth and hedges against the inflation, but like Bitcoin Cash is for day-to-day transactions because of its quick and efficient way of handling the requests. So if you go to the next slide, this is where you can see the performance of Bitcoin versus Bitcoin Cash on the right side. So over a period of 1 year, Bitcoin appreciated by almost 60 times versus Bitcoin Cash is about 2.5 times. So clearly the winner is Bitcoin here. Yeah. In this slide, this basically like gives the rankings and the current price and the market cap. I think like day or two ago, like a cryptocurrency market cap went breached 2 trillion. Like if I'm correct, by the bump in the Ethereum price. So this gives the market cap, and still like Bitcoin holds more than 50% of the cryptocurrency market cap. So the next slide is the comparison of different flavors of Bitcoin forks and its ranking and the market cap. So next slide, yeah, like Hiran Kumar will continue with this.
Yeah, so I would like to talk about some advantages of Bitcoin and Bitcoin Cash. I'll start with Bitcoin. Bitcoin has some great advantages because it's anonymous and it's private. They have value because they are used as a form of money. People can't steal your payment information from merchants. It also has higher hash rate and and it's more secure. Then we'll move on to Bitcoin Cash. Bitcoin Cash is less valuable than Bitcoin Cash. I meant Bitcoin Cash is less valuable than Bitcoin. Bitcoin Cash block is 8 times larger than Bitcoin. Bitcoin Cash is faster and can handle many more transactions than Bitcoin. You would need fewer computers on network, but it's less secure and it's less centralized. You can move on to the next slide, and then in this slide, I would like to talk about some disadvantage of Bitcoin and Bitcoin Cash. Bitcoin has higher price compared to its value a few years ago from market, and it's also market volatility is another disadvantage of Bitcoin. Bitcoin owners hold the majority of its private keys. That's also another disadvantage.
Why do you think it's a disadvantage? Can you explain?
For
me, volatility is the fact that it's actually very volatile. For me, it's actually a great asset, because when it goes down, I can buy, and then I'll just wait until it goes up. And if you don't have volatility, right, then you cannot take advantage of very deep dips. So why do you think that market volatility is a disadvantage? I'm not I'm not saying that it's not true. I'm just trying to understand, why do you guys think that way?
Yeah, I feel that the market volatility can be thought of as an advantage and disadvantage in the sense, if you are investing in short term, then it's great. But if you're trying to hold on and wait until the long term, sometimes you might not be able to predict when it's going to dip, and you might take it out, and sometimes because of that, the volatility is kind of risky.
Okay, I see what you. So you're basically coming from the traditional school of modern finance, which basically associate risk with volatility. What you're saying is that because it's more volatile, it's more risky, and hence it has less advantage than Bitcoin Cash.
Exactly. Yeah. I mean, if you look at it, I think at a certain point, Bitcoin went to very high, then all of a sudden went to very low, and right now it's very high again, right? So if I was in the mindset that, okay, now it's all the way low, oh my God, it's gonna keep going down, I'm gonna take it out, right? Instead of someone who's gonna wait it out and look at it now, it's all the way back up again, or someone who's, when it's really low, thinking about buying it and then waiting it out. So in that sense, volatility is risky in the sense that is volatile, very in the
it's,
like in the
it's
time.
basically 5101.
Exactly.
Yeah.
Okay, and then where was I? Oh, okay. Bitcoin has higher barriers to entry and to understand and to purchase. If you lose your private key, it's nearly impossible to retrieve. Bitcoin's reputation might be tarnished due to due to its use in black market activity. You need internet access to purchase things from your desktop computer, mobile phone, or a debit card. Then I'll move on to Bitcoin Cash. A direct dependence on speed of extraction of new data, and its increased volatility of the Bitcoin Cash rate. BCH rate. It is not considered as a long-term asset, used as a speculative tool, and it's Bitcoin Cash is also considered to have a uncertain future. The next slide shows the transaction fees over the period from 2018 to 2021. And if you look at it, the Bitcoin Cash price is, Bitcoin transaction fee is way less than Bitcoin Cash. So that's another thing to keep in mind. And I would like to talk to you about majority of miners and why majority of miners prefer Bitcoin. The hash rate is a major thing. Bitcoin global hash rate is 169.58 ETS. So a large majority of computer power is being used to mine for Bitcoin. It is 1.5% more profitable to mine. And the other side, Bitcoin Cash, hash rate is 1.25 ETS. This means that the hash rate is only fraction to that of Bitcoin. The cost of buying computers with fast processors power and paying electricity miners want more return for their investment. The Bitcoin Cash mining network is currently operating at 1.02% of Bitcoin. And over here, this chart shows the Bitcoin and Bitcoin Cash mining profitability versus other cryptocurrencies. And if you look at it, Bitcoin and Bitcoin Cash is at the top three, it seems, and including the Ethereum, which is number 2. So that's another reason why people mine Bitcoin over Bitcoin Cash. And then I'll pass it over to Shayna.
So I just went ahead and I pulled the mining pools to break down the different organizations that are working on Bitcoin versus Bitcoin Cash. And like the previous pie chart that we showed, there's fewer organizations working on Bitcoin Cash, and they have a larger lion's share of the pie. So for instance, let's see, there's 17 major groups that are working on Bitcoin Cash. And of these 5 groups, they make up over 85% of the mining pool, which is pretty big compared to 8 groups over here for Bitcoin that make up 84%. So it's just a little more diversified. Bitcoin's a little more diversified than Bitcoin Cash. So that also might lead to the fact of why there was a war. So maybe these larger organizations like Antpool and Hathor and BTC and BTC.com, maybe they wanted to split because they wanted to make more money and generate more revenue from the fork when Bitcoin Cash was forked off of the original Bitcoin. And then this map shows all of the nodes, which is all of the computers that have the Bitcoin software loaded on it. So you can see that, let's see, here's the top 10 countries and the percentage. So the United States makes up 19.3% of all machines. And I just pulled this a couple days ago, so these numbers are pretty accurate. Germany is the next. And then the third is just basically small countries throughout the world. But basically there's nearly 10,000 Bitcoin nodes that span over 96 countries. So when we go back to talking about how are they going to ban Bitcoin or make it illegal, how are they going to take control of all of these computers, almost 10,000 computers in 96 countries? So that's the bigger question. So because it's decentralized means it's harder to target and go after all of these computers. And so I'm gonna pass it on to Alexandra next.
Hello, how's everybody doing?
Good, how are you?
Everybody's fine.
So I'm going to talk about the Bitcoin and Bitcoin Cash risks. The price is very volatile, riskier than stocks and any other investments. So that's why conservative people like me want to keep away from those kind of transactions. Volatility make them more profitable. Bitcoin can or may decrease after you buy them. It's risky also because someone could get access to your private key and take your Bitcoins. And one could use, fake wallets, website, or app and lose all coins instantaneously after entering credentials. So you have to be have some kind of extra layers of protection so that doesn't happen to you. The legal issues that Bitcoin is facing is why are states, central banks, and governments around the world wanting to regulate or ban Bitcoin? It's not convenience for them, of course, because it's an unregulated global currency. Bitcoin and cyber currencies goes against governments' own currency and monetary system, and they can create illegal activities such as money laundering, organized crimes, trafficking, and also they can, contribute to terrorism. There's no legal system that protects the risk for the loss on personal investments, like FDIC, so you're not protected. There you are on your own risk. Its volatility, decentralized nature, perceived threat to current monetary system. Banks don't really like illegal activities, so they don't have to. They don't like to the in and out wire transfers, or sometimes those wire transfers contribute to illegal activities, so they want to keep away from that. The lack of central authority, and Bitcoin doesn't need the entire banking system, so the entire banking system will become irrelevant if everybody start using.
That's a strong, very, very strong statement. I mean, banks have, banks are not just from computer science arranging transactions, right?
Mm-hmm.
Most of the business of the banks is basically debit and credit.
Yes.
Okay. So we have to be very careful when when you say that banks will become irrelevant. They're relevant in the Bitcoin ecosystem, but we have to look we have to look outside the Bitcoin ecosystem. Then banks are becoming very, very relevant. Okay. So I would not, I would say that, you know, it's actually a very strong statement to say that banks are becoming irrelevant. I mean,
Well, actually, what it says is may become relevant if people. I mean, the way I understood it was like if everybody start using Bitcoin, you know, the banks are gonna because banks live by our function by our deposits, our cash deposits or debits on and loans and things like that. So if people, the population start using more Bitcoins, you know, it's like they're going to start losing business because or they're going to have to start.
Absolutely, but you know, you have to realize that on the other side, somebody will issue credit in Bitcoins, because issuing credit is good business. You know, why do we have banks, right? Because, so banks, you know, banks maybe will lose their traditional forms that we have now, but it doesn't mean that the bank is going to go away. Somebody will be on the other side, I'm sure, to issue credit, or, you know, to issue interest rate loans or something like that. Because without that, you cannot, you know, you cannot have a normally function economy.
Okay.
So you're right. If you know, so you're partially right. If ever, let's say everybody are going to move into Bitcoin tomorrow, okay, by some miracle, it won't happen. But let's say everybody is going now to start waking up and say, okay, we will use Bitcoin. So banks as their traditional form are going to lose, of course, you know, their business. But inside the Bitcoin ecosystem, so we will have somebody else that will come and start issuing credit and, you know, extending interest rate loans, etc., 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 etc.
Yes, and also
from that perspective, I cannot, you know, I'm not. I would say that banks will change their form, but, you know, to say that they're may become irrelevant, it's even strong for me. You know, I mean, that's kind of my opinion.
that only will happen if everybody will start, like you said, you know, using Bitcoin.
Exactly, but it's not going to happen. Rest assured, whoever works in the banking system is not going to lose his job because of Bitcoin so quickly.
But it does hurt him if a lot of people start using Bitcoin right now. In terms of like,
I mean, I think that we don't know, you know, the one interesting thing that we do not know how many people are actually using Bitcoin. Okay.
Yes.
We don't know. We just look on the accounts, but we don't know how many people, you know, let's say hold multiple accounts, and how many people are actually have accounts with some Bitcoin inside them. Because if you have an account and you have 0.0001 Bitcoin, nobody cares, you know.
Yeah.
So we actually don't know. I think we're still far away, okay, from the point, from what we call the inflection point. When, you know, when there is going to be a threat to the financial system. Now it may become, when, you know, the threat will become not because people start using Bitcoin, but because maybe, you know, corporations and people will start, you know, actually hold more of their assets in Bitcoin related instruments. Okay.
Yes.
Then it may become a problem for the banking system. Okay. But the banks, look, the banks actually are doing a very poor job of handling money of their clients, and you know, because there is no interest rate, for example, so they screw up the savers. Okay, so some competition, I don't think it's a bad thing. You know, you have a monopoly, you can't move. If you go from one bank to another bank, you're not going to get, you know, to get a much higher interest on your savings. Now, it's not critical for me and for you because we are younger, but if you are a retiree, okay, the fact that you cannot get a 5% savings interest on your savings is a disaster for retirees. Because it used to be that you could, you know, retire on $1 million that you save through your entire life, because you have $50,000 a year, which is actually a very reasonable, you know, income to live on if you don't have any expenses or large expenses. But if you have now 1% or 1.2%, you cannot live on $12,000 a year. Okay, so so this actually makes a lot of difference to retirees, for example, or to other people that actually derives their most income derived from their wealth, for example. They are actually need to risk now to go into the stock market to get some returns. Okay, so the banks are doing a very, very poor job, together with the Federal Reserve, of taking care of the population or the middle class. And now it's going to be a competition, so the banks will have to adjust. The game that they're playing with us from 2008 is going to stop very soon.
Yes.
Because they will actually, you're right, I agree with you that if they will not adjust, more and more people will start using this, opaque asset class.
And then if you have $50,000 in the bank, you go tomorrow and you go next year, you're going to have 50,000 in a few cents. But if you invested in Bitcoin, that's one of the risky part of this, is that you invest 50,000 and you may not have the 50,000 because of the volatility of the Bitcoin.
Think about that. I have no savings vehicle, so I'm getting desperate, right? It's a question of priorities. If I cannot save for my retirement, if $1 million, if $1 million are not enough, okay, to retire, but it used to be, let's say 10 or 15 years ago, it was enough before the crisis. You cannot say that I cannot take risk because there is something, because because there is a vehicle which can give me this in a guaranteed way. There is none. So if it's a stock market or it's Bitcoin, it's equivalent. The stock market, you can actually collapse by 50%, like you had, in 2020, and then what?
Yeah.
So your arguments that, yeah, it's risky. Yes, it's risky. But if I can invest money and it can go tenfold up, I'm going to be willing to take this risk. It's about utility. Okay? Rather than being in a stock market that collapses in 50%, or tomorrow, there is some crazy guy that will start taxing my capital gain tax in 40% rate. It's also screwing up people, If you are, it's also a risk which is coming from the government. Why should I pay taxes at all? Why should I not go into this asset? Okay, maybe I lose, but okay, I'm going to lose anyway, because I'm going now to pay 40% tax, right? Because I'm quote unquote a rich guy, for example.
Yeah. Okay. So I'm going to talk about now the safety aspect to storage. Their hardware wallets, USB drives, to keep the Bitcoin in offline digital wallet like Trezors and Ledgers. Store most of your Bitcoin offline, because if you can move a portion to an online wallet for use in the near future, it's secure. Alter a few digits your private keys, so your reading private key won't be usable by others. And the software wallets, they run on your desktop. You trade some security for convenience with software wallets, and it is best to use software wallets for temporary purposes until you can save your keys on your Trezor or Ledger. Some of the favorite software wallets are the Electrum, Exodus, Bitcoin Core, Jaxx Liberty, Atomic Wallet, Copay, Armory. So it is always important to keep that extra layer of security and protection. And I'm turning this to Shannon now. She's going to close the last slide.
Okay. Hey guys, so as the saying goes, something is only worth as much as another person's willing to pay for it. And after the fork in the Bitcoin Cash, there were fewer people that were willing to pay for the Bitcoin Cash versus the original Bitcoin Core. And just going through our presentation, we tried to do a comparison between the original Bitcoin versus Bitcoin Cash. And it made it clear to us that there were several key people that had great profits that were to be made with the fork. And so they were fighting really hard to focus mainly on Bitcoin Cash versus just improving Bitcoin itself. And like we showed you with GitHub has free software where you could actually get all of the Bitcoin software and make a duplicate and create your own coin. And so even though you create your own copy of a Bitcoin coin, it lacks any perceived value or buy-in from other folks because it's your own copy. And so people don't know about your coin. It's not widely used and it's just not worth other people's time. And that kind of seems what Bitcoin Cash is turning into, is just a copy of Bitcoin Core. And so there's the term that the professor mentions, which is a S coin, and you guys all know what that is. And so really I didn't hear about S coins until I heard about the Dogecoin. And then I realized that there's actually a lot of S coins. And so the professor was using correct terminology, believe it or not, by calling things S coins, because that's what other people categorize lower or non-use coins as, like Doge and several others that have low market caps and low rates and low rankings on the like, I think it's Coin Market Cap is the website people use. So an interesting thing is there's a group called Cobra, and on Twitter they said Bitcoin Cash is dead, needs new leadership and direction purpose, otherwise it'll be worth $0 in a few years. Bitcoin can survive with no leaders, but Bitcoin Cash is different and needs to be shown the way. And that means that Bitcoin is actually decentralized, has tons of nodes throughout the world, tons of developers and miners and owners and even investment firms that believe in Bitcoin Core. Bitcoin Cash was a fork that a small group of miners, developers, and entrepreneurs wanted to create and push. But there's basically still a fight over the path of Bitcoin Cash, and there's no one really stepping it up to kind of make a good use case scenario and continue to market, other than the folks that we spoke about at the beginning of our presentation, like this gentleman from Bitmain. I think, I don't know what his figures are right now, but at one point in time, I remember he owned like $500 million worth of Bitcoin Cash. And then Roger Ver continues to push Bitcoin Cash and creates all kinds of businesses surrounding or related to Bitcoin Cash, as well as this guy, Calvin Ayre. He has different mining pools. He has like casino games, online casino games that are connected to Bitcoin Cash. So it seems like the folks that are wanting to gain the most money out of Bitcoin Cash were the ones that were pushing Bitcoin Cash as an opportunity. And it was more like a platform for them to increase their wealth versus focusing on improving regular Bitcoin. So do you guys have any questions we could answer?
From the audience, okay? I need you guys to start.
Yeah, one question. Sorry, maybe I didn't catch up on that stuff. What do you think the reason why Bitcoin Cash evolved when Bitcoin was going strong?
Oh, is that to me or to the professor?
Oh, to the group. I don't know. I'm just asking the question. Yeah.
Oh, okay. Could you repeat that then?
I was saying because you compared both Bitcoin and Bitcoin Cash, right?
Yes.
So Bitcoin Cash evolved at a later point,
Mm-hmm.
as far as I know. And what do you think the reasons could be why it led to create another Bitcoin Cash as another currency when Bitcoin was going strong?
Oh, well, because
It
to
was
my
because
knowledge,
like,
there were. Oh, go ahead.
the reason that they created a hard fork and they divided it, it was because they weren't, some of them weren't satisfied with the size of it. Some
Yeah,
wanted
it was
to
like
have a small block, some wanted to have a big block and like be able to make more transactions. But the problem was that the more transactions they would make, it would make it a little bit crowded and not as effective or not as secure. It's the best.
Yeah, and so it almost like doing research too, it almost seemed like they were making up reasons why they wanted a fork. So how Lydia mentioned, I'm just trying to find the slide right now, that described why they wanted a fork, but it had to do with the transaction speed. So like regular Bitcoin, it was like 1 megabyte per block, whereas Bitcoin Cash was 8 megabytes per block. And then the security factor, Bitcoin was more secure than Bitcoin Cash, but they were willing to trade speed for security. And then also they felt the transaction costs were expensive. And then they also wanted to work on like different parties believed in segregated witness in creating just layers to improve Bitcoin versus doing completely different stuff. And I think when I was reading into the more technical things, they wanted to make things a little more compatible in Bitcoin Cash with Oracle features. I forgot what that was about, but basically it just seemed like it was a bunk. And really at the core of why there was a hard fork is because these gentlemen over here saw it as an opportunity to make more money because they were entrepreneurs and they knew that forks were possible. And so they had dreams of what they wanted to do with Bitcoin. They wanted it to be easier to use, faster, and at the same time they were coming up with debit and credit cards that were related to Bitcoin Cash and all kinds of products that were related to Bitcoin Cash. So again, that's why they push Bitcoin Cash. So at the end of the day, the fork really seemed more like a money-making opportunity for these entrepreneurs, developers, and miners to make more money. And the professor could tell us the real reason, but from my research, that's kind of what people were alluding to.
No, I think you're absolutely right. I agree with you. It was basically a grift, a grift. These guys were grifters and they wanted to take over the network just to make money, just like this idiot Buterin basically took over the Ethereum network. So you know the core of Bitcoin, okay, is decentralization. And they did not like, they did not like this decentralization. They thought that they can tell the 10,000 deplorables, okay, the nodes, how this software project should be managed. Imagine yourself managing a software project. It's very rare to see even for open source, you have kind of 5 leading developers or something like that. And they wanted to be the leading developers for Bitcoin. They thought that they know all this great technical stuff, so they wanted actually to kill a couple of birds with one stone. One, to take over the network, B, to make more money, and C, to shape, to basically create a Bitcoin which is more compatible for all these, big corporations to kiss their behinds, if you want, like Oracle and Microsoft and Google and all that. So that's why they did it. Okay, so basically, Shannon and Lydia summarized it very nicely. Does it answer your question, Shiram?
Yeah, thank you, Professor. Thank you, Shannon. Yeah, that's what I was trying to understand. Like, because both are probably working on the same platform or network. They might have been forked for a reason. Trying to understand, because one of the topic I think they listed, it might go out of business because then not many people are buying into Bitcoin Cash. So what was the original reason why it was invented even for the first place? So trying to understand that concept. Thank you.
No, I mean, they thought that they would take over the network, you see. The problem was that they did not anticipate the resistance. Okay, because a lot of people, okay, has this Eureka model that if they are going to take over the network, it's not going to be decentralized anymore, okay? Once, you know, as I discussed with you in the first lectures of the course, it is very tough to understand the centralized system, okay? And
true,
you know, and these people don't understand it. They think that it's their own backyard. Well, guess what? Tough luck. It's not. Okay. This is what are, you know, these like people are like Rubini, right? And a bright guy, intelligent guy in NYU makes a lot of money from the system. Okay, going to TVs and all that. He does not understand what does it mean to be decentralized. He does not. Okay, these people do not understand. So they wanted to take over the network. They cannot, you know, they cannot still get what does it mean to be decentralized. That you have 10,000 computers, okay, somewhere doing some stuff and they cannot control it. It drives them nuts, right? They're basically control freaks.
Yeah, I understand. Yeah, looks to me that way only, Professor, because somebody wants to have in control of things probably here. That's what I can understand. So maybe they thought they can control everything and crush
exactly.
Bitcoin.
You're absolutely right. They wanted to control, they wanted to commercialize it, okay? Because they wanted they you know, as Shannon said, they wanted to merge it with Oracle, right? So they wanted to, they did not understand what Bitcoin is. They did not understand the innovation by these guys that we don't know who he is. You know, not too many people understand decentralization. Not too many people understand that you need to have a protocol rigidity. Okay. Lucky for us, you know, we have 10,000 anonymous computer activists that do understand it. You know, so it's actually, we are not there yet. We are evolving, okay? And hopefully, because of this course, you will understand this what decentralization means. It's not just the algorithm of the blockchains that needs to be decentralized. You see, it's the entire protocol, the entire ecosystem needs to be decentralized. And as you pointed to me, the first thing you told me, well, developers can actually change the code. Well, you see example where developers try to change the code and it didn't work out, right? Now now Bitcoin Cash is going to go to zero, hopefully, because it's a third coin. But you know, you deserve, you live by your sword, you die by your sword. You know, if you initiate a war, you need to know how to lose.
I think the rigidity of Bitcoin actually is leading to the stability of the currency there.
Absolutely. The stability of the protocol, not of the price. You know, the stability of the protocol. What is important here,
protocol itself,
that the protocol is actually rigid. It's like the internet.
Yep.
Okay. So you're right. From that perspective, I totally agree with you. I totally agree with you. And what we're actually witnessing now is the emerging of an alternative ecosystem to the centralized financial system that we have. You know, be it all this decentralized finance stuff, be it all these NFTs that people say, okay, it's a turd. Yes, it's a turd, but it's still, it's still better than what we have now with the banks.
Oh, and then Professor, you also mentioned if there was a way for us to kind of talk to both groups in the Civil War. to mediate the war, and there's no way to mediate the war when one side is super power hungry, because you know, they have so much skin in the game and they want to make a lot of cash, and that's what drives them. So I don't think there would be any way to convince the Bitcoin Cash guys to get back on the track.
No, but they lost the war. They
The
lost the
train
war.
has
No
left
worries.
the station with them, so I don't think
Exactly.
they're.
The train is powering through without them. They were left
Yeah.
on the station, as you pointed out, and now they're tearing their, you know, because they could actually be the richest people in the world, and now they're tearing their hair that they do not own the, you know, the Bitcoin core. But that's okay. It's their problem, not ours. Any other questions from the group? I mean, Shiram as always did a great job. Any other questions? No?
I guess one question, just on one of your charts, you showed that map of the Bitcoin miners, I think. Just one thing that I noticed on that, it looked like China was like relatively low on the list, but maybe I probably misunderstood something. I thought that most miners were located in China. Is that, because it looked like on that chart, it said like 19% was in the US, but like 2% was in China? Or
Yeah.
No, these are the validators. These are not the miners.
Oh, okay.
Oh,
so
okay.
I don't have the map of that. In one of the sites that I was using, some of their graphics were down. Just like, for instance, I couldn't get the node count for Bitcoin Cash, unfortunately. And that may have been in development. There were like a few graphs where different sites were improving the graphs. Otherwise, I'm sure I would have pulled it.
Got it. Okay, yeah. So this isn't, I was thinking this was miners.
No. These are not. This is basically how you can actually measure relative freedom of the countries, right? So you can see that most of the most of the validators are located in the West and some in Australia, but Australia is relatively low. Look at China. There is almost none, okay?
Right.
So when somebody tells me who is a freer society, we know by just looking on this graph, you know, because the Chinese do not like, okay, Bitcoin, Bitcoin validators, because it threatens the monopoly of money. Okay, while the US is actually much more, much more free from that perspective.
Yep.
Hopefully, US will be smart enough not to ban Bitcoin, basically to fall victim to all this FUD about crimes and all that. I mean, all this is baloney. But we'll see.
So, Professor, I have a question. If no one else has on our presentation.
You had a great presentation. Wow.
No, like, I mean, like China released their first digital currency. So, do you have any
Yeah,
comment?
but it's still a third, right?
I'm sorry?
It's still a third. I mean, it's basically what is a China? What is a China currency?
A turd. TURD is what he's saying.
Okay.
No, what is a China currency? First of all, they did release it. I agree with you that they did release it because of the pressure of Bitcoin. Okay, but the fact that they released it doesn't have anything to do with Bitcoin. It has more to do with the dollar. Okay, so what they're trying to do, they're trying to create, an alternative payment system to the SWIFT, so that people will be able to transact, okay, with the yuan and not with the dollar. So they're actually trying to basically dethrone the dollar and the US as basically, the most powerful country in the world. Okay?
So now I want to.
So I would agree with you that they actually got this, got this idea from Bitcoin. I'm sure of it. But they're not fighting Bitcoin. They're fighting the US dollar.
Right. So now I want to understand, based on your example that you gave at the beginning of the class, that like you had a story, like a Chinese merchant, they go and sell in Russia.
Exactly. They will not. Are they going to use a digital yuan?
Yeah, that's what I wanted to know, the implication of digital yuan.
It will not. They will not use a digital yuan.
Okay.
They won't use a digital yuan.
If anything,
unless the Chinese will force them to basically say, okay, there is no more cash, and every if you are going to send something, to sell something, it has to go directly through the digital yuan to your bank account in China. If they're going to do that, okay, they won't have any choice.
So will that suppress cryptocurrency trading?
No, I don't think so.
Okay.
Because what they look, if you look in the examples that I gave you, okay, what they use, they did not use crypto directly. They used actually the stable coin, which is the US dollar, right? Yeah. So just to remind you how this works, let me just create a blank page, and let's see if I can actually share the screen with you.
Great job on the presentation, guys.
Yeah, it was very good.
You.
I liked it.
Cheers. Thanks for my group members.
Yeah, good job,
and
guys.
Thanks, Lydia, for doing the segue.
No problem.
The segue, yeah.
Have a good night, Professor.
So if you look on the so basically the scenarios that I drew to you, this is China and this is Russia. And the Chinese go and take their merchandise to Russia. Here, they actually go and they exchange the rubles to stable coins.
Yeah.
That they send back to China. Those stable coins, okay, they're outside the banking system. Yep. Okay, so it's not going to suppress the cryptocurrency unless the Chinese will, the Chinese will find a way, to create the situation where every merchandise that you are going to sell in Russia, immediately the rubles are going to be swapped to, to digital yuans and sent back directly to the bank accounts in China. That's the only way that it actually can, that it can actually create a scenario where it will suppress the trading in the cryptocurrency. Okay. It's not going to move the needle to these Chinese merchants because they do not want to be they do not want to be controlled by the CCP. Okay. The Chinese capitalism the US capitalism is not yet the Chinese capitalism, because the percentage of, they have these private enterprises, but it's a public-private engagement. So you do not have private property or private enterprise in China per se. Okay. So, but the Chinese, the Chinese merchants do not want to be part of this circus.
Okay.
Okay.
Yeah.
So I don't think it's going to move the needle for the Chinese merchants. But what it can do, okay, it can actually destroy the US dollar.
Oh.
Yeah. But we have so many dumb people in the government now that I don't think that they understand simple things like you and I understand. That the creation of the digital yuan is the first step of a long-term plan of destroying and dismantling the hegemony of the United States in the financial markets.
I think 1 or 2 weeks ago, Fed and Treasury had some statement making that they are going to evaluate these digital currencies and see where dollar would stand. I
Yeah,
didn't
but it
follow
will
that
take a lot of time because they cannot, it's in the West, it's actually much slower. So until they, until they will actually do it, by that time it will be too late.
Yeah, but once digital dollar comes into effect, then government can track every single activity that a person does.
And that's why I don't think it will actually happen that quickly.
Okay.
You know?
Yeah.
That's why I don't think it will actually happen that quickly.
Okay.
Unless they want to move to a Chinese style regime.
So would that be the disadvantage of being a democratic country?
Absolutely.
Okay.
Absolutely. I mean, who says that the democratic country are more advantageous than totalitarian countries? That's an axiom that we have, right? But if you look on that historically, I would argue that it's not necessarily the case. The only way that it's happened is because the United States and Britain won World War II, but they forget what happened before that one Germany totalitarian regime actually took over the entire Europe. So you look on the history, you look conveniently only when democracies win, but you don't see the other thing when democracies basically lose. So we actually think that United States and democracy is advantages. No, it's not advantages unless you work to show that it's advantages. If you cover, to your enemies, if you actually try to pander them, then it's not going to be advantages. It's going to be very disadvantages.
Okay, thanks.
That's my opinion. You can agree to disagree. I mean, it's just my opinion.
Yeah.
When you waste your time on nonsense, you're going to get, very sad as a democratic country, quote unquote.
Mm-hmm.
But we'll see.
Yeah.
DJ, you want to be next?
I don't think there's any other choices, are there?
It's up to you. You tell me, yeah, I'm not ready, and then I'm going to lecture.
No, we're ready to go.
Up to you.
We're ready to go.
Okay.
The only question is, can the class handle 2 killer presentations back to back?
The class will. No, you're asking the wrong question. The question is whether Yakov can handle 2 killer presentations, and the answer is yes.
All right.
All right. So, can you guys see my screen? Can you hear me?
Yes. Looks great.
Yes.
We can see it.
Yes.
All right. Everybody can see it. All right. Thanks. All right. So we were assigned to the MT.Gox case study. Our team members are myself. I'm Keith, Stephanie, Dan, and Dave. I'm going to start with a brief history of MT.Gox. So to start, programmer Jed McCallum founded MT.Gox in January 2007, and they're based out of Japan. The MT.Gox domain was originally created to serve as an online trading platform for Magic the Gathering card enthusiasts, hence how it got its name, which comes from the first letters of Magic the Gathering online exchange, except of course the second letter of exchange. So in an effort to better understand the Bitcoin technology, McCallum decided to transition MT.Gox from a Magic card exchange to the first proper Bitcoin trading platform. The exchange and price quoting services were launched on July 18th, 2010, and at the time, Bitcoin was trading just under 6 cents. So McCallum's first major challenges were getting fiat currency onto the platform. He was able to do so using bank wires, Liberty Reserve, PayPal, and Dwolla. The next challenge he faced was the rapid growth rate on the exchange, which McCaleb had never anticipated. They grew 2,000 to 3,000 members within its first 6 months. With the increasing number of members, McCaleb had recognized some security issues were starting to present themselves. He considered raising money in an effort to fix the problem, but eventually decided not to do so. Instead, after only 6 months of running MtGox, McCaleb lost interest in the exchange, and in 2011 decided to sell to developer Mark Karpeles. He sold it for 6 months of revenues, although I heard he may not have received his fair payment. At the time of sale, MtGox was on pace to bring in $100,000 annually, and Bitcoin was trading at 25 cents. So at its peak, MtGox was responsible for 70% of Bitcoin transactions. By 2013, they were setting the price for Bitcoin. They even decided to suspend trading, which allowed the market to cool down. They were the largest Bitcoin intermediary and world's leading Bitcoin exchange. All right, so now I'm going to pass on over to Dave, who's going to discuss the concerns and security breaches. How do you, Dave?
Okay, so this story is all about the failures of MtGox, and there were reasons to be concerned about MtGox as early as 2011 from a security perspective. In June of 2011, 2,000 BTC were stolen, and someone used them, basically sold them all on the exchange rapidly and crashed the Bitcoin price. So that was one event. During the handover of MtGox from McCaleb to Karpeles, in the handover agreement was noted the fact that 80,000 BTC had been stolen already. That was sort of known and part of the agreement. I guess the plan was for Karpeles to try and make that up by earning transaction fees over, the course of his operation. And then once Karpeles took it over, a side wallet that he had that had 300,000 BTC in it was stolen and then eventually returned. It was sort of a white or gray hat hacker. So there was lots of red flags around this. It was early days. It was the Wild West. But there were lots of things to say, hey, you might not be safe keeping your Bitcoin on this exchange. Next slide. So now we get into the main theft, in which really over 80% of customers' Bitcoin stored on the MtGox exchange were stolen. The big thing to know here is it wasn't a binary event. It wasn't like one day the hacker was there and stole all the Bitcoin. It actually took place over the course of really 3 years. You can see in this slide, there's a chart showing the declining balances. And in total, the stolen Bitcoin would today be worth over $38 billion. So you think about that in terms of thefts in history, certainly up there, although obviously it wasn't worth quite as much at the time. And the other thing this chart really points out is how poor the security controls at MtGox were, such that this exchange, this robbery essentially could be happening over the course of 2 years, and they didn't have the controls in place to detect it or prevent it.
Do we know how many developers actually were on the payroll to handle the exchange?
I don't have a count, but it kind of feels like couldn't have been many. It feels like it was almost, it was a shoestring operation, really. And a lot of the best practices of Bitcoin security hadn't been developed at the time, although, they're not rocket science. I think, looking back, really any other management team in the position of operating this exchange probably would have done a better job than Karpelès and, you know, however many or however few incompetent developers and security professionals he hired. Next slide. So who's responsible? We don't really know is the short answer. The most popular sort of response to who is responsible for the hack itself is this character, Alexander Vinnik. There's a good website called WizSec and a guy who himself, actually like me, had his Bitcoin stolen in Mt. Gox. This guy went and put together a series of analytical approaches to detecting, using the blockchain, using the data available on the blockchain. He's put together a series of analytical approaches to detecting who could be behind it, how the breach happened, where the coins flowed. And so the key marker that points to Alexander Vinnik is the fact that an account linked to him actually sold stolen coins back onto the exchange. So if you follow that, they were sort of cheeky enough to steal the coins, move them around a little bit, bring them back onto the exchange, and then sell them for fiat on the exchange. Vinnik was ultimately arrested in France for money laundering with respect to an exchange he himself operated, a competing exchange at the time. The other responsible party is clearly Mark Karpelès, who was the owner who took it over from Jed, and really his crime is just incompetence. He was in way over his head. I think he was an investor. He spotted an opportunity, and he was able to, buy the exchange at a good price, but he had no capability to effectively manage it or really turn that opportunity into what it could have been. He was ultimately charged with falsifying data as authorities started to investigate the hacking. Really, it looked like he wasn't responsible actually for the hacking or didn't support it. He was mostly just trying to cover up his incompetence, and that landed him a short jail sentence. Okay.
In Japan.
In Japan. I'm sure Japanese prisons are pretty nice, all things considered. Okay, next slide. I'm handing it over. Oh, no, one more slide for me. Okay, so the aftermath, really two kind of concepts came out of this. This is sort of famous in Bitcoin. This event, the Mt. Gox hack, is sort of famous in Bitcoin history. And there's two kind of concepts that have left their mark sort of on the community. One is one we've talked about here, which is the phrase, not your keys, not your coins, which really just means if you let somebody else control your private keys, you are turning over your fate, your destiny to them. You're delegating your sovereignty, your wealth, everything to them. And so really the way to go is to custody your own private keys. Bitcoin is great in that it doesn't require you to have a bank to validate your transactions or custody your money. You can do it yourself. That's unique. And so really the ethos is you should take advantage of that unique aspect of Bitcoin. The second thing is a thing called the Proof of Keys Day, which is January 3rd, which is a concept that says, okay, well, you might, for various reasons, trust a brokerage with your private keys some days, because perhaps you're a trader or maybe you're using a company like Celsius to earn yield on your Bitcoin. But on January 3rd, the ethos is to withdraw your coins from any third party that you're trusting, such that they know that they're on watch to not fractionally reserve your Bitcoin, meaning they have to have it fully backed. They have to be able to deliver it. And that behavior by the users sort of keeps the third-party custodians honest. And if those two sort of ideas had been well established at the time of Mt.Gox, it wouldn't have happened. So that's the security breach and the moving forward. And next slide.
All right, so I'm going to talk about the bankruptcy proceedings. In 2014, Mt.Gox filed for bankruptcy, specifically February 28, 2014. They filed for a form of bankruptcy called civil rehabilitation. What this means is it allows for courts to seek a buyer. As you can see, the numbers were not good. Their liabilities were basically double their assets at the time. So as Dave mentioned, they had lost about 750,000 of customer Bitcoins, as well as an additional 100,000 of their own. This accounted for about 7% of all Bitcoins at the time. It was valued around 473 million. And this next bullet's just kind of the chart that Dave had showed earlier. That all this evidence came out later, but the hack was kind of ongoing. Like Dave said, it wasn't just a one-time thing. This occurred over time. So they're also facing lawsuits from their customers. They had shut down trading effective February 28th, 2014, and that led to a bunch of class action lawsuits from people that just couldn't, all action was stopped on the exchange. So customers were filing lawsuits left and right. And on top of that, they also had an outstanding lawsuit from a separate exchange called CoinLab, and we'll kind of get into that a little later. So March 9, 2014, they filed for bankruptcy protection in the US. This is sort of on the backs of many class action lawsuits, as I just said. And this temporarily paused any legal action in the US from claiming fraud. They wanted to kind of, put everything on hold and get their ducks in a row. So then, and in March, Mt.Gox found about 200,000 Bitcoins in an old digital wallet that they had. So this reduced the total missing Bitcoins out from about 850,000 to 650,000. And those Bitcoins were valued around 118 million at the time. So following that, they filed for liquidation in Tokyo, which basically meant they were giving up on rebuilding under that the civil rehabilitation.
Can I interrupt? Can you please? Why did they suddenly wanted to file a bankruptcy protection in the U.S. as well? I mean, what difference does it make? Because it's a Japanese company, so why suddenly they want to do it in the U.S.? Do you guys know?
From what I could find, it was because they were getting so many class action lawsuits from angry customers, and this was pausing legal action against the company and Mark Karpelitz, the CEO.
I see. Okay, great answer.
Sure. So they gave up on this rebuilding process and they filed for liquidation in Tokyo. And so then the bankruptcy proceedings began on April 24th of 2014, and a trustee was appointed, a Japanese attorney. And you can go next slide. So as time went on, the timeline kind of thins out a bit. Most of the action was early on. In 2015, Mark Karpelitz was arrested in Japan. He was charged with fraud and embezzlement. He had misappropriated over 2.6 million in investors' Bitcoins into an account that he controlled. And this was actually completely unrelated to the bankruptcy because this had happened prior to the 2014 collapse. And that goes back to the jail time that Dave had mentioned as well. That's what he did time for. This was separate than the bankruptcy. So in May 2016, creditors' claims had reached $2.4 trillion, and the trustee had basically said, we can only track down 91 million worth of assets because of all of the Bitcoins that had been lost. Over 80% of the actual Bitcoins had been lost. So it's a huge discrepancy, obviously. Fast forward to 2018, the trustee says that enough Bitcoin had been sold to cover the non-Bitcoin claims, meaning the fiat currency that was remaining in customers' accounts. Obviously, no Bitcoin, they can't replace that. But the claims for the outstanding cash in customers' accounts at the time the exchange was shut down was covered, because obviously as this progressed, the price of Bitcoin had skyrocketed, right? It went from worth about $100 or so at the time up to now, today it's worth 50,000. But the problem is with that, outstanding lawsuits have been holding up payment. And then the last bullet is 2019, the civil rehabilitation proceedings are still ongoing. And I'll pass it to Steph to kind of take it from there and see where we are today.
Awesome. Thanks, Dan. Yeah, so basically, the rehabilitation was continuing in 2019, but there were some pretty big breakthroughs in 2019 on the whole Mt.Gox scandal, basically. So a really big speculation that came to play was that Russian hackers were behind the hack of Mt.Gox. And I found a blurb from the Japan Times newspaper article, basically, that this character that Dave talked about a little earlier, Alexander Vinnik, his name got basically brought back up since he was responsible for stealing a huge chunk of Bitcoins, 600,000, that they traced back to him. So he was kind of a person of interest that the government was focusing on. And then also in 2019, this guy named Brock Pierce, he's basically like a crypto entrepreneur. He came out with the idea that Mt.Gox should basically start up again as the exchange for Bitcoin and also refund its customers. I listened to a piece of a podcast of Brock Pierce, and personally, I couldn't tell where he stood. He seemed like he was in favor of returning the stolen Bitcoins to its creditors, but he basically was proposing that Mt.Gox should start again. And then also in 2019, a lot of the Bitcoins were found. So this guy, I don't know how to pronounce his name correctly, but Nobuaki, he was basically the trustee of Mt.Gox. He's working to still working to reimburse its creditors who lost their Bitcoins. And this is an extremely long process that's still ongoing, as we've said, just because there's a lot of ongoing lawsuits. And basically the biggest question mark is still the future of Mt.Gox remains really uncertain, really highly speculative to this day. Nobody's really sure what's going to come of it. Next slide, please. Okay, so we mentioned CoinLab. So CoinLab has a $16 billion claim against Mt.Gox, basically for a failure to, Mt.Gox failed to, they basically breached a contract to do business in the United States with CoinLab. So that was like a big lawsuit against Mt.Gox. And then other lawsuits include just fraudulent activity by Mt.Gox. This guy named Gregory Green, he actually filed on behalf of all the U.S. creditors against Mt.Gox and Mark Capellas for basically being negligent and fraudulent, for basically failing to protect the exchange as a whole, starting from, like Dave was mentioning, back in 2011. So where this lawsuit ended up, it's kind of hasn't gotten far, I think, just because there's a lot of situations on the table and there's not really much that they can do for his lawsuit in terms of negligence. But yeah, they're still trying to find the hackers of Mt.Gox, and the Japanese government actually launched an investigation. Basically, from my interpretation of it, it seemed like they were under the impression it could have potentially been an inside job, just because the price of Bitcoins increased like crazy, and then they were hacked like basically shortly after. So the Japanese government is they're super suspicious of MTGox, and if this was basically an internal job, and if Mark Karpeles is at the head of it. But yeah, so then there's also a lawsuit against even the proposal to bring MTGox back as an exchange, just because it was so unsafe and was subject to many security breaches in the past. Next slide, please. So the future for creditors, which is pretty important. So as of January 2021, so first quarter of this year, CoinLab had made an agreement with MTGox, and it's basically to help the investors recover a portion of their funds, only 90% before all the lawsuits are settled. So basically, this agreement that CoinLab is proposing is an opportunity for investors to, so to speak, cut their losses and basically not recover everything that they lost, but take an early payment and then cut their ties with MTGox. So it's still, the agreement is still pending approval from creditors. And it's important to note that investors, creditors, they're not required to take this agreement or take the early payment. They can wait if they want to recover 100% of their losses once the lawsuits settle. But it's noteworthy to point out that they have no idea how long this could be. So some investors are interested in claiming what they can now before the lawsuits are settled, and some are holding on to those settlements and then want to collect 100%. And this is also important to note. So for every 1 Bitcoin claimed, the trust only holds 0.23 Bitcoin. So broken down here in these bullets towards the bottom of the slide. So there's 2 options. The first option is that creditors can claim about 21% of their holdings of 90%, or they can claim 23% of their holdings 100% once the lawsuits are settled. And then there's also kind of like an unspoken like third option, but like a third party investor such as like Fortress, they're trying to buy the claims as well. So basically it's a huge question mark. This approval agreement, it's still not even certified yet. It has to be approved for any of this to go forward, but those are the 2 options that are basically being drawn up and offered, and hopefully will be offered to those who lost in the MTGox hack. Next slide, please.
Steph, do we know how many people are actually involved? Like, okay, we're talking about these lawsuits, but are we talking about thousands of people, hundreds of people, hundreds creditors? How many people actually were on the, lost Bitcoin in this business on MTGox? So we know they saw, they lost, let's say, 600,000 Bitcoins or something like that, or 850, whatever. But how many people we're talking about that were actually are actually involved in this?
It's like 20 to 30,000 people.
I was gonna. Thanks, Dave. I was gonna say like, it's interesting because I've said this before in class too. Like I'm pretty removed from crypto, but learning about all of this, like there's so many different pieces to the puzzle. Basically, yeah, like 20 to 30,000 people involved, like who lost their Bitcoins. I mean, basically everyone's kind of a suspect here. Like Karpeles is a suspect. This guy Alex Vinnick is a suspect. Like it's very, very interesting that it's so many people involved and so many people could be to blame. So
we're talking, let's say we're talking now 30,000 people, let's say 20,000. So we're talking like around 30 Bitcoins per person. Now this, which is basically going to translate into 6 Bitcoins because the trustee holds like 0.2 for each Bitcoin, which is a liability, if I understand correctly. So we're looking at 6 Bitcoins for 30,000 people. We're looking like between 300 to 400 grand, 300 to 400 grand for people to recover if they're now going to agree to this lawsuit, correct? More or less.
Right. Yep. It's
Do
kind of
you
crazy.
do you agree with my calc, Dave, or you have any?
It sounds pretty accurate to me.
Okay.
No,
Very
yeah.
accurate, I'd
Thank
say.
you, Professor. It's yeah, it's crazy. It's a lot of people. It's a lot of money, a lot of Bitcoins lost, and a lot of questions, basically. So I mean, I can only imagine, and I'll talk about this right now, how the future is unknown. But I can only imagine how frustrating and disappointing it is for the people who lost. You know, but basically, through all of this, the Mt.Gox hack it's impossible to predict exactly how much the creditors are going to be able to recover. The lawsuits can't determine that at this point in time. And I think Dave said that there was like a website where creditors can go in and like kind of have an estimate of how much that they think they're going to gain back, but there's no exact like prediction. Again, which is frustrating, you know, if you're somebody who has severe losses. But so
let me be Steph. Let me be a devil's advocate here, and you know, what I'm going to say is not basically you know, meant to be a punt or, you know, to troll these people or whatever. But in some sense, I would bet that for those creditors, this is basically a blessing in disguise that they actually, you know, had these Bitcoins lost. And I'm going to explain why. Because had they had these Bitcoins in their possessions, okay, those Bitcoins would be sold a long time ago.
Mm-hmm.
You know, people would not hold them. So they basically were forced to enter into a buy and hold strategy, you see, which is a simple strategy basically to make money for Bitcoins. And now, basically, if I understand correctly, they actually can recover. If they will agree to this agreement by this trustee, they can recover like between 300 to 400 grand on average. So they need to basically say a big thank you to this Russian guy that actually hacks those Bitcoins, you know?
Yeah, I mean, being somebody who, again, I'm very far removed from crypto, but especially the Mt.Gox hack. It's an interesting approach, Professor, because like it's a hard lesson learned, but you're right. Like if it hadn't happened, who knows what would have happened.
And I'm saying this, look, I'm telling this you from personal experience because I lost my password, you know, to my wallet, and I hired somebody basically to hack my own wallet. Okay. Now, had I not lost, now when did I do it? When actually Bitcoins actually rose in a price that it actually made sense for me to do it. Okay. But I assure you that had it not been for the losing wallet, which is actually corresponding to the fact that people actually lost money on Mt. Gox, okay, those Bitcoins that I own would be sold much earlier, and I would actually make much less money that I actually made by holding to these Bitcoins, you know, and kind of saying, oh, I don't care about this, you know, I don't care about this wallet. It's lost anyway, right? So I actually recovered it when it was, you know, when it became interesting, when it actually was substantial amount of money. So I think that most people do not understand, but it's actually a blessing in disguise. They need to thank their lucky stars that this guy actually stole the 600,000 Bitcoins.
Yeah, I'll let Dave give his comment because, you know, like I said, I'm removed from it. So I see it both ways.
I would agree with you for the average case, certainly. And I can speak specifically to myself. You know, I had sold out my principal in Mt. Gox, and the Bitcoins I had on it were, you know, all gain. And the plan was basically just to ride it out. But you're right. Ultimately, possibly I could have ended up selling. at some point. But personally, I ended up buying back. In once the price started to recover from the collapse that happened to the overall Bitcoin price after the Mt.Gox hack. I mean, for a while after the Mt.Gox hack, I would say there was a sort of feeling among some people in the community that like it was over, but it wasn't. It wasn't. And when the price started to recover, I ended up buying back in.
So what you're saying is that you basically so that the opportunity cost that you could maybe potentially trade them and actually may make much more money rather than to do buy and hold. That's what I'm advocating.
No, I agree. Buy and hold. Trading is not a good idea. But I'm saying,
well, I'm not trying to pick up but you don't need to tell me how much you lost there, right? It's absolutely your business. But my question is, if you agree to this asset, to this kind of agreement by the trustee, okay, are you going to basically be much better off than you are now by actually recovering those those bitcoins that you lost there?
I mean, I'm gonna have more Bitcoin that I own because I bought it after Mt.Gox than I'm gonna get back from Mt.Gox.
Yeah, but still, it might be a nice DAF, right?
Oh, it's definitely nice, no doubt. I'd say your estimates were pretty close.
Yeah, that's my profession.
Yeah.
Thanks, Dave.
I'm looking for a ski house in Vermont, Professor. If you know anyone selling one, let me know.
I mean, I have to tell you on a personal level that Bitcoin did change my economic situation. I mean, I wasn't able to retire, it's true, but I could do things that I couldn't do before, and I didn't own a lot, but yeah, I actually feel it. And now I hope I will feel it also with some other currencies that I bought. It's actually a lot of fun.
Professor, what do you think about earning yield on Bitcoin? I sent the link to Celsius.
I'm reluctant. I'm asking myself, why do I need to earn a yield on Bitcoin and risk my Bitcoins if this baby can appreciate 5 times more?
Right. But you have to sell to realize it. If you're earning a yield,
I don't care selling it, David, because I live only once. I'm
sure.
not look. My strategy it's very simple. Okay, I want to make something of my money. So if I have a lot of money, I can maybe travel. I can actually have a good life.
Sure.
Maybe I can move to a bigger house.
We're in different places in life, I think. So you can almost you can sell to fund a retirement, whereas I'm more looking for cash flow.
Well, then it's a different story. If you are actually want to surrender your Bitcoin to somebody and basically be part of this, be part of this emerging DeFi, then it's fine, right? I'm not. I think that I'm not. I'm not going to risk my crypto assets, in something like that.
That makes sense. It's
a wild west,
right.
These places, and I told you this many times, this is not for the lighthearted. And for example, I can appreciate Alexandra's position that it's fun to learn about it, but it's not fun to play with it, which is absolutely fine. I mean, I'm not sure I agree with her position.
Sure.
Because maybe I'm close to her age or something. So, but it's absolutely fine position. It's absolutely okay position.
You can also provide the alternative position, which is if you put yourself in the position of someone who lived in Argentina or Venezuela or any of the countries that had loose monetary policy in the past,
We're having, look, we are having loose monetary policy now, right? We are actually, the Federal Reserve destroying the middle class in a consistent way, okay? I mean, today somebody came, had the impudence, to go to TV and said that he's sick and tired that the simple man is fleeced, okay? And when I heard it, basically I said, okay, you and your Treasury and your Federal Reserve is fleecing people like Alexandra left and right, brainwashing them, doesn't give them a safe retirement, because you're not going to allow 5% interest rate, because then you're going to bankrupt the country, okay? And you are telling me that I don't like, with the old, I mean, come on, man, come on. It's disgusting, David, so they're destroying the middle class. And then they're telling me that they're taking care of the middle class. No, they're not. The reason why so many people are in this business of Bitcoins is because, they're desperate for yield and to make a little bit of money. Alex is absolutely right. You have a hidden inflation in the system, right? Houses and higher education, and people are desperate to fund all of it, So what do? They're going to an asset which can appreciate 10 times more in a distance, in a time span of a year.
Yeah. Since the 1980s, bond yields and bond prices have been spectacularly profitable. And as bonds hit the kind of zero yield boundary now, it's entirely possible that Bitcoin is the sort of inverse of that bond cycle.
Yeah, but the bonds, the bonds were not profitable, okay, for people that they were profitable for bond traders, not for people that are actually trying to fund their retirement, because these are buy and hold people.
Well, if you bought long-term, government debt in like the 80s, with an 18% yield, it was risky then because inflation was crazy and people thought yields were going to go up. But
I know, but so for people that you bought in I agree with you, but we're not talking about people that are bought in the 80s. In the last 15 or from 2008, we don't have interest rates at all.
Oh yeah,
we're looking
from
at
2008,
the entire generation of people that cannot fund their retirement. I mean, give me a break.
Well, and Bitcoin came on the scene in 2009. So
absolutely.
That was
you cannot see here. It's not a coincidence. When the government and the governing institutions violate social contracts, Bitcoin is a result. Carteles is the result.
Beautiful. Thank God.
Okay, guys. Great. I'm actually enjoying listening to you. Continue.
Thanks. No, so that was really great discussion. Basically, like the slide says, the bottom line, I think the biggest takeaway from Mt. Gox is the future is still uncertain. So it could, in theory, come back and be an exchange for Bitcoin. It could not. It could be an inside job. It could not be an inside job at the same time. And I think most importantly, too, for the creditors, with this CoinLab proposal, it definitely provides some hope for people to get their Bitcoins back and reclaim some of their losses. The biggest downfall to it, though, is that there's really no timeline. And I saw like a headline, and who knows how true this is, but the third bullet here, like global law firms are just, and it didn't mention who, but just generally speaking, that they weren't very optimistic that creditors will get their investments back. But with that being said, I mean, this CoinLab proposal, agreement, rehabilitation, however you want to classify it, definitely gives creditors some hope that, they are able to reclaim some of their losses. But I just think the biggest takeaway is that it remains uncertain and nobody knows what's going to come next. So with that basically brings our MT.Gox conclusion or presentation to a conclusion here. I don't know if the rest of the group has any more questions. This was like a really interesting period of time, especially for Bitcoin users. So I don't know if we'll open it up to the rest of the group if anybody has questions for any one of us, myself, Dave, Dan, Keith. It was interesting. If I would recommend, I mean, if no questions from the group, if you just do like a quick Google search, if anybody's interested to like really learn more, it seriously is very, very interesting.
What was your Steph? What is your kind of feelings when you looked on this thing? You know?
Yeah, no, that's a good question. So, well, it's the stuff that was happening before the big hack. So like when like the Bitcoins were being stolen and people were literally stealing them and using them back on the exchange and selling them. I mean, the security, like from afar, it kind of looks like obvious, like, oh, hey, MT.Gox, you have security concerns, like you may want to do something about it. And then to have nothing done and then eventually like the biggest hack. I don't know. I can see it from the perspective of maybe people not paying attention, but then also like if this is what you're doing, like Mark Karpelès or whoever in charge, I feel like they probably could have done more to make MT.Gox more secure for its creditors and its users. If it was me, I'd be kind of pissed. I lost all this, but I mean, you bring up a good point, like how you said, like maybe it was a blessing in disguise, and I truthfully didn't think of that. And I mentioned earlier, I listened to a couple of podcasts that Dave sent over, and one with Jed, and he totally doesn't trust Mark Karpelès for good reason, and then one with that Brock guy, who's an entrepreneur for crypto in general, and I feel like I didn't trust him either. I don't know, like you can't trust anybody. That's my feelings of it. I mean, I don't know. That's a good answer, but it was very, I feel bad for the people who lost on, this big hack, but.
So, one of the claims is that, that was against the entire thing, that, okay, if Bitcoin actually, if MT.Gox is lost, then we cannot trust the Bitcoin ecosystem. Okay. So,
right, yeah.
What do you guys think about this kind of claim? That okay, we cannot. I mean, the exchanges are actually centralized, and now we have a decentralized system, and now we are actually trading through centralized exchanges. So the system is not really decentralized. And we have this example of MT.Gox where most of the people are actually keep their money on exchanges, not in private wallets, like like in private wallets. So so what do you think about that? I mean, now, for example, Coinbase can blow. We also saw an example with Coinbase that there was a lawsuit against the SEC, and then they suspended, XRP. Now, lucky for us, it's actually no, it's not my private key. But okay, so what do you think about these things that most of the people are actually going through centralized exchanges to trade Bitcoins? And we saw what happened. So what do you think? Do you understand my question, guys?
Are you asking me, Professor, or anybody?
Oh, the entire group, not just you, Steph. I mean, I cannot, I cannot grill you all the time. It wouldn't be fair.
Well, that's good. Well, because I don't have any Bitcoins, but maybe I should after all this.
It's your decision, Steph. I cannot, we cannot tell you what to do. I mean, once again, as I told you, as I keep telling you, right, it depends on your risk appetite.
Mm-hmm. Well, it's interesting too, because I just read an investment book, and I know you and Dave had just said this, how it's basically like saying people in different stages of their life should have a different appetite for risk. And So when you guys were just, having your conversation, it's interesting because and obviously like that's pointing out the obvious, I'd say, but you're right. I mean, I don't consider myself somebody who's a risky person, Bitcoin or not Bitcoin, like I'm very cautious. So it would definitely be pushing myself outside of my comfort zone. But in this investment book that I just read, because being in, my mid 20s, that my appetite for risk should be higher. So it would be interesting if I get some Bitcoin after this. You did your job well then.
I would pay my Bitcoin to be in my mid-20s. How about that?
Guys, there's also low risk ways to get Bitcoin. There's, but this is not the professor's question. The professor's question is, should we view the hack of Mt. Gox as a problem for Bitcoin or not?
Exactly.
Well, I feel like it's a problem for Bitcoin newbies. Like I certainly wouldn't hand over my private keys, whether or not it's supposed to yield a certain percentage. And it's like the key takeaways of Mt. Gox is to keep your keys private, because that's why they're called private keys. And it's just not worth the risk for me anyway. Just hodl. Hodl's better than putting your private keys with an organization that's promising you a certain yield.
What do you think, Dave? Is this a problem for Bitcoin or not? The Mt. Gox, or you can say, as Bitcoin advocate said, well, it has nothing to do with the network. It has everything to do with trading.
On the narrow technical level, obviously, an exchange being breached is not a problem for Bitcoin. Bitcoin will continue to function no matter who trusts their private keys to who and who gets burned by trusting somebody else. On the broader user experience level, to Shannon's point, exchange breaches slow the adoption of Bitcoin, generate a bunch of FUD, fear, uncertainty, and doubt, and prevent people from coming to the realization that Bitcoin is maybe one of the best forms of money ever. Slows down adoption. So those are the two competing forces there. I would say it's an evolution. The trusting of somebody else with your Bitcoin is evolving. Mt. Gox was like, the analogy would be you were part of the San Francisco gold rush, and you staked a claim somewhere up in the hills of wherever, pulled out a bunch of gold, and you brought it to some, pine shack that said bank out front. And a few days or a few weeks later, some crew came through with their 6-shooters and held up the bank and took all your gold. That was the analogy then. Today, the analogy is probably more like, I don't know, a bank you would have today. The same level of trust that you would have with a bank today is the same level of trust that you probably should have with keeping your keys on an exchange, a major exchange like Coinbase or Gemini, or like a Coinbase or a Gemini.
Yeah, but you also need to remember that, Coinbase, let's say, was around, let's say, 9 years, and now, in a week, with God's help, Coinbase is going to become, a publicly traded company. So from that perspective, I think the security of these exchanges did improve. This is my
went from the Wild West bank to the level of the bank level you expect from a bank today.
Well, it's not going. No, it's not, because still Coinbase actually involved, and I'm sure of it, because it's not fully regulated. They have, they're doing shenanigans. But from security perspective, I think they do have a protection, some sort, a better protection that Mark had in MT.Gox for their clients' money.
Oh, for sure. I mean, they offer a product called the Vault, which gives you basically a wallet that they create for you, but which they don't know the private key for. Like it's given to you. Anyway, they're miles ahead of MT.Gox.
Exactly.
Show.
Exactly. But you know, first of all, whoever wants to invest in Bitcoins, okay, and I told you guys, you don't need to actually now these days and age, you don't need to go to Bitcoins because you have gazillion other cryptos that are interesting, you know. And I named just few here: Binance, Uniswap, and you know, Ethereum, and other which are cheaper than Bitcoins. And you just need to go with a mindset that yes, I'm going to lose all my money. So this is what okay, if I'm going to lose $5,000, will I cry? No. Then okay, maybe I should invest $5,000, because this $5,000 can become 100 or 200,000, you know, which might be very interesting to you in your, you know, mid-20s.
Yeah, I would say unless you really know what you're doing, I would recommend at least 50% of your crypto portfolio be Bitcoin. But yes, definitely, you know, the biggest risk you could have right now is not investing and missing out on the upside. You need to be able to frame it in both ways.
Yeah, but you know, P, I mean, you shouldn't. I'm not. The one thing that I don't want to do is to, oh my God, because of my professor, I invested in Bitcoins and, you know, or any other crypto, and I actually lost money. No, if you're in this mindset, then don't do it. But you know, it's in some sense, as I heard in an analog, that you know, crypto. They talked about Bitcoin, but it's more like crypto is like a gunpowder, you know. You either adapt to it or you fall victim, you know, to it. And it might be that it's actually it might be that this is actually going to be the correct analogy, because if somebody doesn't invest in crypto, he may actually miss unimaginable riches. On the other hand, it might be that it all will go to zero. We just don't know. We just don't know. We just don't know. Personally, crypto was good to me, but I cannot, you know, but I may be a risk taker in my age than most of you in your age, you know, so it might be that it's also connected to the utility function of people. I have not tried, you know, what I try to do in this course is to give you some sort of tools to think about this in a, you know, in a kind of more formal way, if you want. And you should look, you know, the other things that you want to think about is entrepreneurship, because you know, this is as DJ said, it's David said, it's a Wild West. And if you have an idea, you know, you can actually maybe try and implement it. It's not that hard. Any questions to me about the second presentations to the group?
I do have a question related to Bitcoin and what was previously said. You said it's a good time to it would be a good idea to invest 50% of your portfolio in crypto in Bitcoin. Do you
No,
think
I didn't say that. What David said.
One person said that. So I'm not saying no, I'm not saying anyone recommended anything, to be clear, but to kind of spin off of that, do you think Bitcoin has plateaued in a sense? Although it's probably stabilized around the price it's at right now. Do you think, how much more do you think Bitcoin would grow? Do you foresee them splitting? What do you think the future has? for Bitcoin?
I mean, the full potential market of Bitcoin is really massive. It's basically it's competing for all savings. And so here's just quickly, if you think of, there's a lot of things that right now that have a monetary premium. So things like fine art, houses, land, these things people pay more money for them than their underlying utility, because they're scarce, because they serve in part a monetary role. And so Bitcoin ultimately is competing against gold, real estate, fine art, all these things as a store of value. And if you look at what's going to happen to Bitcoin's scarcity relative to its supply over the next 100 years, which is dictated by its supply schedule, it's going to become the hardest form of money available. And it's going to have the security via the network to back it up. And so there's a good chance that it drains a lot of the value that's currently, the monetary value that's currently in real estate, gold, art, out of those assets and into it. And that's the most optimistic scenario. But in that scenario, it's 100 trillion or more US dollars at current value, versus a current market cap today of about 1 trillion. So that's 100x upside potential. Obviously, huge amount of risk in that. Regulation, crackdown, all types of things can happen. But the upside on Bitcoin is still 100x. And it's come a long way. And it's gained a lot of important supporters so far. And having watched it myself for 10 years, to me, it's already crossed the threshold to where it can't be stopped. And in my mind, it's likely to achieve something like that 100 trillion market cap.
Do you think that, so there was a huge dip in Bitcoin in February of 2018 where it fell by over half. Do you foresee it dipping again and then rising again?
I'm going to share in the chat just an article. There's a Dutch analyst who's done a lot of work on Bitcoin's price. And the theory is largely that its price is being derived from changes in its supply. And as the halvings occur, the supply dries up, the price increases, it hits a blow off top, and then it collapses, in some cases up to 80, 70%, but still at a much higher level than its previous sort of stable level. So I'll just send that link through. And that's basically my thinking on how the price is working, and you'll be able to read that.
That's great. Thank you.
You could also just like in another way to think about the future price too, a relatively straightforward way is like if you just look up the amount of global wealth, there's hundreds of trillions of dollars of global wealth. The more that, like David was saying, the more that this gets adopted, more wealth is going to transfer into it. And you could, given the finite supply, you could do a simple calculation. You could say, what if 1% of, global wealth gets put into Bitcoin, divide that by 21 million Bitcoins, you have a projected future price that's easily in the 6-figure plus range, So I think it seems like it's pretty easy to justify or to picture a much higher future price, I would say.
And kind of imagining that in the future, what that looks like, you've got a bunch of central banks talking about central bank digital currencies. To me, all that is good for Bitcoin. If just imagine a world, let's say it's in 30 years where everybody's using digital wallets. Yes, everything you buy is probably still priced in your national currency, US dollars, maybe, or maybe it's Turkish lira, or maybe it's Chinese yuan. But your central bank has a monetary policy which is oriented around stimulation and printing, which means if you save your money in your local currency, it's going to lose value. But you've got a digital wallet anyway, so you can save your money in Bitcoin, which has a great monetary policy that is known and pre-committed. And then you can just convert your Bitcoin to local currency seamlessly via any global internet-based exchange to make your local currency purchases.
Pure joy to listen to you guys. Very good. I'm going to recommend my chair to hire David to do Bitcoin lessons and not Yakov. I'm an obsolete dinosaur. The one thing that I want to point.
No, you're not, Professor. You're great. I've learned so much in your class. I came into this class with absolutely zero knowledge of Bitcoin, and now I've already invested in several cryptocurrencies, and I'm very happy with the result.
Of course. But you know what I want to actually emphasize that people are concentrating on Bitcoins, but you're right that other cryptos, okay, might also have a very big potential, because we're actually now, this technology is not just limited to this thing of, yes, it's going to suck the financial wealth from other things, but it also can address the decentralization issue that we have now, right? I mean, we have now like five companies that control us, okay? And people do not do anything about it because there is nowhere to go. And as I said last time, even if some other site, okay, is going to open and say, okay, this is you are allowed to post ABC, it's still the same problem because it's centralized, okay? Now this technology actually, and we have Filecoin, I think. There are efforts to do decentralization, and this actually holds big potential. I do believe that it's just a matter of time until we will have a decentralized social network. I'm not going to create those decentralized social networks because I'm too lazy and to do it. But for sure somebody will. Okay, and the blueprint is actually going to be through the decentralized applications that we have now, like Filecoin and whatnot. Now, also, this thing is actually threatening the current financial system in a direct way, and I can actually give you an example of Binance Coin, which is basically a security by all means and purposes. Okay. Yet, so basically they actually forbid US citizens, okay, to trade this security, which is ridiculous. It's going to be like a war on drugs. It's going to fail. And, but so they have now competition to the current monopoly. And it's actually, very interesting to think about, okay, if now I can do a fundamental analysis, because let's say I have a exchange which actually issues security, or a company which issues security without the regulation of the SEC, okay? How much money I can actually make with this company through the fundamental value, through its fundamental valuation, and it doesn't have the overhead of idiotic, reporting every quarter to the SEC and to all the other idiot investors that are actually trading on Wall Street, and all the giant army of analysts and all these guys, right? All of this is going to become completely obsolete with this new financial system. It's something to think about as well, not just, okay, it's going to suck all the wealth from arts and and real estate and all that. It's okay what it is going to do to the financial system, what it's going to do to the government, what it's going to do to SEC and to other regulations. And once it will start doing SEC and other regulations, it will also reform, I'm sure, the other agencies, and how government operates. This time around is Binance Coin, but it might be something else. It might be Filecoin that you like, or Storch, or Shia Coin. A lot of things which are actually emerging now, which are basically decentralized, and it feels to me like the early internet.
It really is revolutionary. It's kind of a slow revolution, and not everybody is seeing where it's heading yet.
It's a gunpowder,
I do love
when Aztecs met Cortez, they didn't know what hits them until he started to use a gunpowder on them, and then they were gunners. It's a gunpowder, but it's not gun. It's a gunpowder for the financial system. It's going to break the mold of financial tyranny that we're actually living in. Okay, I know that all these regulations are quote unquote to protect investors, but actually they're not protecting investors because they're taking the responsibility from investors. And people can say to me, Yaakov, you're a demagogue. It's a cheap demagoguery, because who has time? Who has time to investigate all these companies? My answer is, if you don't have time to investigate the companies, keep your money in the bank with 5% interest, and you'll be done. It's very simple. Very simple. Life is much simpler than hundreds of agencies that tell us what to do. Wear masks, not wear masks, false positive, false negative, and all the other nonsense that we're surrounded, Okay, are there any questions? No? Okay, guys, so I'm going to wish you a nice spring break. And who is going to talk? Who is going to talk after the spring break? Is Dominic's group, and who else? I forgot. Only one group is left.
No, yeah, our group will too. My group with Melissa, Christian, and Shuram.
What are you going to discuss?
Tether, Bitfinex, Bitcoin speculation.
I see Bitfinex. Okay, great. Excellent.
And then our group, XRP versus Stellar.
Oh, yeah, I know. My favorite, right? You're going to destroy my favorite, my pet currency.
That's right. It's going to be one slide, end it all, go home, have a good day.
Yes. And your professor is an idiot because he likes XRP.
Uh-oh.
I'm going to be on the last boat. I'm going to hold XRP until zero. I don't care. And by the way, Jed, who actually created MT.Gox, he actually was the one that was responsible. He was one of the founders of Ripple, by the way.
Professor, do you want to give the Ripple pitch? I don't think I've heard you give it.
What? No, Ripple pitch? No, I don't care about the Ripple pitch. I just care that it's a superior technology. That's all. That you have 3 seconds to settle transactions. Better than any Visa, better than any bank, better than anything in the world. And you saw the wallet, right? I can hold dollars, I can hold yens, I can hold crypto. Nobody tells me what to do. in my own personal wallet.
It's not too centralized, you don't think?
Huh?
It's not too centralized.
I don't care about this stuff. Who cares?
They're gonna the CCP is gonna take Brad Garlinghouse.
The CCP is going to get to take over Brad Garlinghouse. I don't think they're going to take over the the XRP.
Save all this
XRP
for
is an American company. It's the only American currency. All the other currencies are not American. This is the only American currency.
Hashgraph is US based.
Well, Hashgraph, well, yes, but I think Hashgraph is dead wood. But maybe I'm wrong. We'll see. I mean, Hashgraph is basically trying to emulate Ripple in my book. I don't understand. I don't understand why. Proof of stake also emulates Ripple. So nobody can explain to me why I need to invest in extra in proof of stakes and Cardano, Schmardanos if I have the origin. The origin is always better, right? The God is always better than its poor imitations. It's a superior technology. Who cares? And you think proof of stake is not centralized? Ethereum is not centralized? Who cares? I have affinity to XRP. What can I do? You cannot. It's like your first love. You can't forget it. Even if you're old. That's it. Okay. Any questions? No. Have a great spring break. And with God's help, I'll see you Wednesday, 2 weeks from now, right? Okay.
Yep.
All right. I'm going to deploy it on YouTube with your permission. Is this okay? I'm going to deploy this recording on my YouTube, okay? On my YouTube channel, because I want to give you the stage.
Fine with me.
And the only one that embarrass himself is Yaakov. Nobody else. You guys are perfect. You are civilized.
Works for me.
All right. Very good.
Thanks, Professor.
You are welcome. Take care, guys. Have a great day.
Good night. Have a nice spring break.
Thank you with God's help.